Big focus today, not just on the broader investment space, but really on direct lending and alternative credit. And one of the specialists in that space, Harry's Management, still seeing opportunities out there. That includes, well, even helping buyout shops shore up the companies they back against higher interest rates, while at the same time providing cash back to fund investors without necessarily having to sell those underlying assets. I'm pleased to say that the head of Ares Credit Group is joining us right now. Kipp deVeer live here on the Milky stage. Kipp, great to see you.
Thanks for having me.
Where are you finding opportunities right now?
So we're actually finding a pretty good constructive backdrop for everything that we do. Just as a reminder, credit, real estate, private equity, secondaries, and we play in a host of different geographies. Obviously, our largest business in the US, but we're in Europe and we're in Asia as well. So I think my quick takeaway is we're actually seeing the economy better than we might have expected at this point.
U.S. economy? U.S. economy or everything?
I think the global economy is saved for a few, but the U.S. economy in particular, for sure. We've been questioning a little bit, isn't transaction activity down a lot? And then when we go back and look at the deployment that we've had in our businesses, it would actually tell you that we're doing fine. To me, that means we're picking up market share and just continuing to be more and more relevant in all the businesses that we're in.
With some of those transactions, are we primarily talking about kind of mid-tier, middle market type companies or something bigger?
Yeah, I mean, we have a pretty broad credit business. So today it's about $300 billion of assets in 5 different businesses. I mean, it ranges from the lower middle market, which can be probably as small as 20 million of EBITDA, but increasingly we're able to finance these much larger companies that you all are writing about at Bloomberg. So, multi-billion-dollar deals as well.
What are those deals looking like? And I'm curious, in a higher rate environment, how that kind of impacts the financial structure a little bit.
Oh, it's so loud in here. Can you say that again?
So what's kind of, in terms of a higher rate environment, how is it impacting a little bit the financial structure of the deals? It is really loud.
I think, look, the good news is a higher rate environment means that assets are worth less. That's true, real estate, corporates, et cetera. So you're starting to see a reduction, I'd say, in purchase prices on corporate assets and certainly on real estate. And of course, with higher rates, that helps because you don't need to set these companies up with as much debt.
What kind of deals are getting done in real estate in particular? I think we continue. We've had a couple of conversations on the residential side of things.